Hello everyone, welcome to Beach Investing. I'm your host, Andre Angelkowski, and today we have a chartered accountant, George Dube. How are you doing?
Excellent. Yourself?
Very good, thank you. George has been an accountant for about 20 years now?
Yes.
Or just over 20 years. And he focuses on real estate investors, which is a great thing for you viewers. So George, one big question that we ask is, do we incorporate or do we not incorporate?
Great question. It's unquestionably the most frequently asked question that we receive. The answer is always the same. It depends. And there's not going to be a boilerplate solution for any particular investor. And we typically like to go through with our clients to show them there's kind of 5 different areas that we look at in evaluating whether or not they should be incorporated. Roughly speaking, 80% of the time I'm in favor of incorporation, but there's certainly instances where I'm not keen on the concept. And a lot of it's going to come down to what the priorities of the investors are. And there's not necessarily a right or wrong, there's right or wrong for different investors.
So do we bring anything to you, like to kind of give you a better sense of what do we need to bring you to kind of help you offer that advice to us?
What I'm trying to do is actually get out of our clients what they're trying to accomplish over the short, medium, and long term, how they're going to be doing things, what currently exists, and what opportunities are in place. They may have, for example, already incorporated an operating company, and it may immediately point to benefits of setting up a second company, or alternatively their family situation, where maybe a husband and wife have very high-paying jobs, great pensions, etc., no children. That may lead things to one decision. Whereas if there's spouses where there's a high-income earner, low-income earner, some children preparing for post-secondary education, that could tilt us in another direction. So there's going to be a lot of factors in there that effectively, it's not that there's going to be a lot of preparation required, it's that there's going to be some time in the thinking of, for our clients, what would we like to accomplish? And not that they're going to be able to nail that with 100% certainty, because next month their plan's going to change, of course, but it does give us some scope as to say, if someone's intending on acquiring 3 properties over the rest of their life, versus somebody coming in and saying, we want 3 properties next month, and every month thereafter, I'm on a completely different train of thought.
Okay. No, that's good, thank you. And another interesting question I'd like to ask you is, what are the top 3 things, or what are 3 things that people think they can expense when they really shouldn't expense?
That's a good question. I'm pretty sure I've never been asked that before. Often where I would suggest people are going down a little bit the wrong path is not necessarily whether it was right or wrong to expense, but the scope of what they're trying to expense. So for example, someone trying to claim that a huge majority of their travel expenses or meals and entertainment are somehow related to the investment side. Not that some of that cannot, but sometimes they'll take it a little bit too far. We will frequently have people come in and ask if they can deduct the principal portion of debt against their taxes. So in other words, they're going to make that mortgage payment with principal and interest. Why cannot they deduct that principal? Make a long story short, because you can't, but the ever popular golf fees, of course, are something where clothes are typically not deductible. That's going to come into play where someone is trying to make a major addition to a building. They've spent 100 grand or whatever the magic number is. Well, most likely we're not going to be able to deduct that all initially. There may be a good focus too on, in my mind, an underutilized expense, and that's taking the accountant out for a drink or something. And we need to work with that some of our clients, I think.
Okay, and the final question is, if you had to offer our viewers, who are mainly real estate investors, 3 tips on what what would you offer them as 3 tips as real estate investors out there?
A lot of people get into trouble not because they don't have the best of intentions in the world or whatnot. They are not very well organized. And that actually takes 2 different levels. One in the sense of tracking the various expenses that are incurred, and just to have an idea when it comes time to fill out tax returns. It's pretty difficult a year after the fact, in many cases, to remember exactly where money was being spent. So if the various receipts and whatnot were kept in some organized fashion, it makes the job of actually taking that tax deduction much easier. So getting organized on the bookkeeping side. And the other segment to that, or number 2 maybe, is finding out exactly what type of structure we should have. Should we have the corporation or a trust or a partnership of this or that? Finding out some of the stuff before we really start is a lot easier than we're several years into our program, and it really would have been nice if we would have done that 5 years ago. Not that any situation's unsalvageable, but there's missed opportunities that way. And often by having that correct structure or a more appropriate structure at the beginning, that in itself can go a long ways towards saving the money. And the third piece of advice maybe is, what is working today may not be working tomorrow, so it's still going to be a period of reevaluation, and not just with the accountant on the tax side, but the lawyer on the legal side, the mortgage broker, the real estate agent, the this, the that. You want to have that team into place so that you're doing what you're good at, they're doing what they're good at, and reevaluate. Because again, objectives change, situations change. Make sure you're changing appropriately. Not necessarily that you're completely starting from scratch every 2 years, but tweak as it's required instead of letting it get out of shape and effectively losing tax revenues or taking risks you shouldn't be, or missing opportunities to grow, assuming that was your objective.
No, that's great advice. Thank you for that. And for our viewers, if they wanted to get in touch with you, what's the best way? Do you have a website?
I definitely have a website, and soon we'll be changing too, but the current address is Dube, D-U-B-E, dubeaccountants.com, and certainly via email people can get a hold of us, or by phone, and the phone number 519-725-3566. That's the main office in Kitchener. We have a Mississauga office, and there's a handful of different numbers and whatnot, but usually things start best through an email.
Okay, well thank you. I'll put your information below the blog.
Fantastic.
And thank you so much.
You're welcome.
You are a great wealth of information. I appreciate it very much, George.
Pleasure.
Thanks, guys.